Today's CPI number is about to dominate the headlines. Markets will react to it, commentators will dissect it, and for a few hours at least, it will feel like the single most important economic number in the world. But there is a problem with that, because the CPI figure released today may already be out of date. Welcome to Money and Power. And before we begin, a quick note. If you find this kind of analysis useful, you may want to join my Substack, The 2% Brief. I post short market notes there most mornings or evenings for free members, and when something genuinely significant is happening, I publish deeper reports for Inner Circle members. The link is in the description and comment section below. Now let's return to the CPI number itself. The inflation figure being released today largely reflects price movements during February. That is how the system works. Data is collected, compiled, and then released with a delay. But in the final days of February, something else began to develop in the global economy. The sharp escalation in tensions with Iran and the sudden surge in oil prices. When energy prices move quickly, the inflation story can change very rapidly. Oil does not just affect petrol prices at the pump. It feeds into transport costs, logistics, manufacturing, agriculture, aviation, shipping, and eventually into the price of many everyday goods. In other words, oil shocks do not remain contained in the energy sector. They ripple through the entire economic system. So even if today's CPI print comes in exactly as expected, perhaps calm, perhaps reassuring, investors still need to ask a second question. Does this number actually tell us where inflation pressure is heading next? Or is it simply describing a world that existed several weeks ago? This is why interpreting economic data has become more complicated in recent years. Markets move faster, geopolitics can shift rapidly, energy prices can jump within days, and financial markets often react long before official statistics fully capture what is happening. A single inflation release can therefore be misleading if it is viewed in isolation. What matters more is the sequence of events that follows. Do oil prices continue rising? Do supply chains begin adjusting? Do bond markets react to the possibility of renewed inflation pressure? And how do central banks interpret all of this? Those are the questions that shape the next phase of the market cycle, and they are rarely answered by a single data release. That is one of the reasons I launched the 2% Brief on Substack. YouTube is an excellent platform for discussing the bigger picture and highlighting the signals that matter, but it's not always the easiest place to provide ongoing interpretation as events unfold. On Substack, I can post shorter notes when something important is developing, sometimes in the morning, sometimes later in the evening, simply explaining what is happening and why it matters. Free members receive those updates, but when the situation genuinely warrants it, when there is something substantive to analyze, I publish more detailed reports for Inner Circle members. These go deeper into the forces driving markets and what investors should be watching next. That's not something I produce every day. It only happens when the situation truly justifies it. At the moment, Inner Circle membership is $9.99 per month or $79 per year, or $99 for a founder's membership, which locks in the price permanently even if the subscription rises in future. But again, if you simply want the regular market notes, the free membership will give you access to those as well. Ultimately, the goal here is quite simple. Most financial commentary focuses on the headlines, but serious investors need something slightly different. They need context, they need interpretation, and sometimes they need someone to step back and say, this number may be important, but it may not yet reflect the full story. Today's CPI figure is a perfect example of that. It will dominate the headlines, it will move markets, and it will be analyzed endlessly over the next 24 hours. But the real question investors should be asking is not just what the number says, it's whether the world has already changed since that data was collected. And if the oil shock we're now seeing continues to develop, today's inflation number may end up telling us more about the past than about the future. If you would like to follow these developments more closely, the link to the 2% brief is below in the description and comment section. Thank you for watching, and if you found this analysis helpful, please like the video, subscribe to the channel, and enable notifications so you do not miss future updates.